life? Can you do that, buddy?
No, that's not possible.
Okay, I will take the pressure off you. Anyway, very good work, Alien. Very good work. You saw this coming. I hope you capitalized on it. And now that these things have been fulfilled, it's most likely possible that now you're going to look for this big dollar rally, or do we still have some more work? Huh?
Yes. Yeah.
Okay.
Let me start by saying it was just the famous thing to say, plan your trade, then trade your plan. So that's what we did in early, at the end of the year, and we capitalized in the rest of the month. So now we are just taking profits. I mean, the community. I'm sharing this with the community.
You know, because sometimes when I'm talking about I say we, and then I'm asking myself, I go, well, we talked about this, and then I realize that unless I have multiple personalities, which I do, it's really I, not we. I think we say we to be humble, or we to give us cover in case it doesn't pan out, so we could blame it on the other guy. Which is us, right?
Yes.
All right, buddy, let's get to the charts.
Okay, I will share my chart as usual. 1 second. Sharing entire screen share. Okay, here you go with the S&P chart. You got it?
Not yet.
Okay.
At
the same time.
Yeah, got it.
Yes, I did.
Got it.
So, the big surprise, but it's not a surprise. S&P is still holding that area. If you know this is a really important area, and we said last month this could be, a tricky move. While USDN breaking lower, US indices will hold. And this is exactly what happened. I mean, if you look around, the DAX, the Russell, the Nikkei all broke lower, while S&P and Dow Jones and Nasdaq hold the support area. I mean, we didn't see an extreme move like we saw, for example, in case of the Nikkei, almost reaching the 50 back area. So, I mean, was.
Yeah, I would have thought with the yen. I would have thought with the yen going to your targets, and we came within 100 pips of your targets of the 109 level, that the S&Ps would have already been 1,700.
Yeah, but this is
that's why that's why I think there is a chance for your first scenario to set up another rally into. I don't know.
And that's what I'm thinking too, because at the start of this year, there have been a change in the correlation between, oil, S&P, and the yen. I mean, there was a new shift in the market. So I tried to figure out which market will be the strongest and which will be the weakest. That's why I said stay away from S&P and Dow Jones if you want to short, and look for, other opportunity, because the yen trade was a perfect one. We said we will get back to retest. You called it yourself, a retest to 121 area, and we had the strong rally to the downside, and we achieved this target. I mean, it missed the 109, but it's a monthly support. And if you remember the chart from last year, we talked about the 110 area. I mean, it's a big area, but every time we got a break, we come to retest it. Every time we get a break, we come to retest it. So this time, this retest could either fold for a new rally, or just another small pullback before going lower. So
back to the breakdown, back to 116,
116.
Okay. Yeah, that'll be the line in the sand. We negate the breakdown, and then we get higher levels. You know, then we get 122 again, right?
Yes, I mean, it's going to be a tricky move in the coming weeks, and I have to be honest, this area represents maybe for aggressive trader a good opportunity to go long. I did it myself this morning, and I think it's worth taking, because looking at yen reaching this level while S&P is still holding this trend line and finishing this move, I think we still could get this rally. At least 50 back of the decline. I mean,
yeah,
it's around
a lot of that 61.8, I think around 1980 was what,
yeah.
1978. Yeah. Okay.
So this is, I mean, the bigger picture for S&P and the yen pair, because we still have more downside target for the dollar around the 100 mark, and even we get failing rally, this could be also a good shorter opportunity. So I mean, in the shorter term, the bigger picture is divided. We have to play, I mean, to play it step by step and wait for, I mean, other ways to find the setups. For now, it's going to be a pullback. I mean, if you are short, it's better to take profits, and if you want to take long, this was a good spot today, because providing this 100 pips fall, it has to pull back sooner or later, and this is the area to take it. And
yeah, we've had 1,000 pips, 1,000 pips, so yeah. Why not halfway back to the breakdown?
Yes, 1,000 pips fall, so it's that's how market works. It will pull back, and then we'll decide the next path. But let me go back to.
Okay.
And this is only. I mean, I've been sorry, not this chart. This one for the oil, because recently the indices around the world have been crashed during the oil crash. So this move have been a bit was a bit correlation with the, and this is looking similar, taking similar paths. So for this oil reaching the 26 area, you know, we talked about this at the start of the month. We said we were about at 37 area. I said my target is still 26. We missed it the first time, but we got it today. And looking at the smaller structure, I think we are just finishing a move to the downside. With this support, we will get a bounce, and this bounce will support a move higher in the dollar yen. You still there, Dale? Okay.
Yes.
So, okay. So with this move,
so you get a bounce. You get a bounce in crude, yen, and the S&Ps from.
Yeah, right, that's what I'm expecting for even I'm expecting the oil to go lower, but at least we will get a pullback, because this is already initiated in the dollar yen, and this is already supported in the oil. This is a good opportunity. I mean, there is a lot of structure. I'm talking about Elliott waves and harmonics pattern, and they are supporting a pullback to around. I mean, let me zoom out. This is the head and shoulder.
I'm thinking back to 38.
Yeah, but I don't think this will be the one for 238. I'm not sure, but for now, I'm thinking.
If you're only looking for, what are you looking for? A $3 rally?
Yeah, something to retest. Yes, to retest the head and shoulder neckline, and we go lower to 20, because I mean the correlation starts. I mean, when the correlation shifts, it will just stay for a period of time and then go back to normal, because this move will start with the dollar yen strengthening, and then later just the oil will break out. I mean, will break out from the correlation. This move could be just a weakness in the oil, and the dollar will continue to be strong, because I'm still expecting lower targets for the oil, because my first target was 26, but now I'm looking we could go to 20, because it's still holding the bearish channel, and nothing said we can break to the outside. I mean, your case, for your case,
where's your broader channel line come in?
I mean, to
the blue
this one or the
no, the bigger one,
the big
above it.
The bigger one.
Yeah.
Yes.
Yeah.
If you go from here, it will be around 37, 38, like you said it. But
that's
I mean,
my belief. That's my belief.
Yeah.
Before we go to 20.
Okay, we can do something like this. This will be a strong rally. I mean,
No.
but
1.618 of the last bounce. Anyway, we'll see.
We'll see.
I hope you're wrong.
You have to keep in mind, yes, the line in the sand for now will be the neckline. Either way, this is a good opportunity to go long, even for an intraday. For small trades. Okay. And you can just, when you reach here, you can move stop loss to break even and wait maybe for a break to the outside. But for now, we are targeting lower moves, even though the dollar yen, because if you want to take the path of 38 and keep the correlation on, this means a straight ahead pullback to this level for dollar yen. I mean, this will be a sharp reversal for dollar yen. So I'm not quite sure about that, but at least we will get this pullback. So this pullback should be supported with the S&P and the oil. And at the same time, if you go back to the dollar, the structure, I mean, last month we talked about this move. It took some time before breaking to the downside, but for now, it didn't quite look as a bottom for me. So I said this area should be supported, but now looking to this structure, I think any it will even extend a bit lower, but any bounce should be sold off to retest the 93 area, because I was thinking we will get a new rally from here, but I think it's going to fail. Looking at similar paths and different instrument, this could be a failing rally in the dollar to go back to the support area about 93, 92, and we reserved this scenario for, at the extreme. We said we could just still be trending ranging in the big rectangle, and this is what's going to happen, because breaking below 95 will invalidate a move to the upside before a test of this level.
Okay.
And,
I'm kind of in the camp. I'm kind of in the camp that we're bottoming in a lot of these things you're talking about, and that this would kind of make sense. I'm curious to see what you're saying in the gold, but I've been kind of thinking that the dollar index makes a new high, maybe 102.50, and while the dollar index is making a new high, we get a wave 2 pullback in gold, maybe back to 1110, 1080, something like that. So we could have one more
in gold.
Okay, you got,
something like that.
Yeah.
Okay, that's possible. That's possible because but if you see this kind of move in gold, it could be tricky because it looks really impulsive, and it looks even better than the rally we had back to back here. It has clear structure. It's more impulsive, so that's why I'm thinking the pullback should be just shallow, and it will support a break to the outside. That's why I don't favor selling the gold or anything. I prefer to wait for pullbacks and keep buying it for now. Even this is a strong area.
I see you have like a 1680 number up there after 1300, but 1300 seems to be 1285 seems to be your next target, right? And then we get through there, that we could go to 1600, huh?
We can just retrace to this breakout level. I mean, we have too many targets in the upside, but for now, it's going to be just so important to see the reaction around here. And even so, you can keep looking for new lows in gold. This is still valid because we have no breakout, because here you could say that this is a strong close for the gold, and we are going to break to upside, and the next week you get a full reversal. So we have to see a weekly close and then decide, because it could just next week we could just rally to new highs and then do a full pullback, and this is a bearish signal for the next move. So
okay, well, I think that would a new lows in gold would imply new highs in S&Ps, in my view.
Yeah, that's for sure.
Because
That's why
it's all been fear money moving into it because of stock market routes.
It's the same old safe haven market. Okay, this time it didn't support the dollar, but it supported the gold, supported the yen, and even supported the dollar franc. And this is how you should see the risk-off mode and ways of switching to take positions. And like you said it, if gold is going to new lows, this will implement the S&P to new highs to around 22 marks, and this is still a target, and it's still a valid target. You can go long with stop loss below this channel. I mean, it's a valid trade, looking for new highs, and you will get a pullback. For me, I'm not going into any trades because I've been trading since the start of the year. I over traded my account. It's been a good month. I mean, I think it's my best start for a long time of a year. So I'm going to take, like I say, it's like I'm telling to take a pause to reassess the market, because after a good winning strike, everyone should take a break, because maybe the next move I'm not seeing that clear, and it could be just as messy as it gets. So for now,
let me ask you this: after a good strike, do you pull money out of your account and put it into maybe more conservative investments, or do you, I think that makes it real. Brokers don't like it, but I think when you have huge windfalls, you should pull some money out of your most speculative accounts and put it into more conservative accounts, or even keep it in cash. What do you think? Hello? Maybe we lost him. Oh, go ahead.
I said I prefer to withdraw profits and keep it in cash. In my pocket.
Okay, in your pocket. Okay, that makes makes it more real than to feel it in your pocket.
Yeah.
Okay, I was curious, because I think that's awful good money management, because they're only digits in your account. It's kind of like when you go to a casino and they convert your money into chips.
Yeah. You have to see the money.
Right, and the chips, you don't value the chips the same way you value cash on hand. Okay,
yes,
so just a good idea.
Yes, there. Okay, let me just switch to the euro. I'll just put the euro chart from last month, and I want to point out the similarity about the structure we are having back to this one, because at this support we never broke to new lows. It's kind of a double bottom. It looks the same at here, kind of a double bottom, and the moment you think this is just a small pullback before going lower, euro just spiked higher. It was strong rally, and I'm just warning we could see something similar like this, because let me put the live chart. We are here, and if this month will close above the 12 mark, this is a strong signal to keep away from the shorts, because we could just get a sharp rally here to stop hunt the shorts, the bears, and retest this strong area, because this is a strong 1.2 area. Yes,
and if it does that, if it does that, the lows are in. We shouldn't see new lows in the euro. So it's got to stop here for us to take out parity. Is that what you're saying?
Yes, that's what I'm saying, because we have two paths. Either from here, because if we break this, it would be a strong move. And even so, Dale, I mean, the market is full of surprise. Even when we hit this, looking at the structure, every time you have to look at the structure, because this is how the market is sending information. Because even we can take these highs with a corrective move and still go lower, because this is exactly what it did here. It took the highs.
Right.
It did strong move, but in the inner structure, it was a corrective one, and it reached 161.8 target, and then continued lower. So this path could be the same for this move. Just a warning: we should be reaching a near-term top for now to have a pullback, like you suggested.
I'm thinking 110.80. I'm thinking 110.80. What are you thinking?
To retest this area.
That if we get a retest 110.80. It was right there.
Okay. Yes, we could go to one. I mean, to keep
111.
This. If you want to, let me make it clear. If you want to look for new lows, this is your spot. I mean, it has to close below this area in a monthly basis, and you can go looking for new lows. But if we just get a shallow pullbacks and a small pullbacks, I mean, the euro is still supported, and we will get a new wave after we finish this. We will get new waves to new highs, and this could be huge for euro. If you go back to the dollar, it's the same trade, just because I said we're going to see this kind of pullback, and I'm thinking this is gonna be a failing rally, and this will drive the euro higher. I mean, this is just my scenario for now, even though my
line in the sand's about 98.50. That's where it broke down. The Dixie, in my view. Yeah.
Okay.
Once we took it, kept holding 98.50, 98.50, and once it took it out last week, that was it.
Okay. So, but if you get a pullback to 98.50, this will be a strong rally, and the euro would be already around here. So this is not that bullish for euro, and we could be just failing. Anyway, for now, for the shorter term, we are approaching a near-term top, and we still maybe in the inner structure we will still be doing some new highs, but it's looking weaker and weaker, and then we will get the pullback, and this pullback is supported and the dollar yen retrace, and even in the franc, the dollar Swissy. I mean the Swissy pair, because it's at the same time still holding the 50 back, not like the dollar. Okay, let me go back to the dollar. The dollar.
That last chart, if you show the Swissy, it looks incomplete with two drives. See that? You have two touches on that upper line.
Yeah.
You got 1, 2. You have what it looks like you could have one more drive. See that? You have the drive in March, you have the drive in November, and there could be one more drive.
You're talking about these highs, yes. To the okay.
Yeah.
Yes, because this is, I mean, this is still supported, as I was going to say, and this is only a 3 wave. So if we are going to have a strong rally, this will take it to new high for sure. And I mean, this is just, if you take this as a triangle, we are retesting the breakout, and at the same time we are still supported. So a move to the outside is probably what's going to do. But you have to keep in mind that the dollar is expected to do a failing rally. So this move, if it doesn't fold as a strong one, it could be just a failing rally. And so we have two main scenarios for the coming weeks. A bounce is, I mean, the bounce, let me say 99% 100% sure about it. But the continuation, we have to see the pullback, the structure, to decide which path, either new highs or just another selling opportunity in the dollar. So you can take this and apply it on different pairs, and you'll find it's almost the same.
Okay. Before, I do want you to get back to the pound, because that was something you were talking about, 133. But here's my rationale. Before this big break in the S&Ps happened this year, bears, the market sentiment, investors' sentiment, AAII was real bearish before we even had the break. The break was so vicious, where you have things like LinkedIn losing 40% of its value in a day, Solar City losing 30% of its value, all the momentum stocks, their backs are broken. And I don't think anyone's really left long this market right now. Also, the VIX is way under levels that we had back in August and again back in January. So you know how I think Mr. Market is the meanest guy in the whole universe? and that, you know, that I think people for the first time are thinking about shorting the market or getting out, and everything they see on TV, and the radical division politically going into an election year in North Korea, sending up ballistic missiles, and you know, we're on the verge of war in so many different areas, that the one thing the market could do right now would be to give us a marginal new high in the S&Ps or head towards your target, and people will think everything's okay again. They got out down here, they get back in above 2100, and then they pull the plug. So that's just my preferred scenario, and that's my bias, how I'm trading right now. I could be dead wrong. I've been wrong a bazillion times.
Scenario for the market. That would be the perfect scenario to play out in the market, to get everyone on the wrong side, and then go your way. So
and then lose 50% of its value from 2200. You know, I'm also, for several months, people have been pointing towards this April time frame. So I think if this is going to happen, it's going to happen quick. I think between here and maybe the equinox in late March, spring to April. So that's just my gut hunch, Noster-Pinkard view of what you're presenting here.
Okay, Dale. Yes, I have to add, maybe if we get this rally till April, and we get the May sell-off as usual. Like they say, sell in May, and you could be right about. So yes, you made a good point, and
I mean, I'm not hearing anyone, you know, maybe a few guys saying, well, you could buy the market carefully, just have your shopping list and just put a few pieces on. But, you know, Ray Dalio, famous guys, talking about the bloodbath. And then you come back to a guy like Martin Armstrong, who, when I interviewed him, thought we would hold that 1800 level. We've taken it out a little bit, but he's pretty sanguine until 2017, and still pretty bullish the dollar. So the dollar could have that one more run, and I think that would be supportive of the stock market, supportive of crude oil, and short-term negative the gold market. Those are my calls, but yours are better.
No, even your calls are perfect, because I mean that would be the perfect scenario, and that's why I lean to. I mean, that's why I added alternatives. So I mean, because I don't like perfection in market, because market always, because if I'm expecting a perfect reaction from gold here, just to follow this channel and go lower, I mean, it looks too perfect to be true, but to be true. But this could happen, and nothing could change, and the dollar could just from here could just start rallying to new highs, and this will support your view. But I love to take it easy and
right, a day at a time. Do the right thing today, and all these long-term forecasts are, you know, they come and go.
But you are right about something, because if you take indices, you have I love to do these things in a similar way, because when there is a good opportunity to go short, I don't look at S&P and Dow Jones. I just look to other markets, and because they really break to the downside strongly. But when you want to go long, it's better to stay with the US market and go for longs, because the long side tends to be clear and tends to be stronger. That's why short the weakest and buy the strongest. And for now, this is presenting a long opportunity. And I mean, looking my way, I'm taking this as a long opportunity, and it could be a home run for now. And if Armstrong is right about it, this would be a really good move till next year. So why not?
Right. I think Armand also thought, he was talking about this last year, that he didn't think the bear market in the S&Ps would happen until Obama leaves office. And then we have the big bear market. So we'll see. Did you want to wrap it with the pound? The pound has been showing much more relative weakness than the euro.
I mean, it was a simple move, the pound. It did it in just 2 weeks. It retested the last low. I mean, the breakout, and we are just trading low. I mean, it's so clear. Just don't complicate things. It was a clear structure, going short around the 46 area. That's why what I did last week, and now hoping to get this down move to 133. If it's what's going to happen with the dollar. So at least for now,
I can't see the pound going to 133 and the euro going to 120.
Yeah, you are right about it, because
I mean that would take the euro pound up to, I don't know, 90. From here, it'd be another 1,000 pips or so. Anyway,
but it's going to be support if the euro going to make this move, this bigger move. The pound will be supported, and we will just hang around here. Maybe we do a double move to retest. I mean,
maybe
to retest 49, 48, 49. Yeah, because we said we could go back here. So this is still we have to look a deep pullback, and then this move, and then when the euro finish this, we will get the lower move. But for now, it's still looking bearish. So I'm sticking with the shorts, and I'm not favoring a short euro, but I'm thinking to take one, maybe if we get a higher level around 114, 114.50, I will take a short and see how it play out if we get.
You know, I actually have a third drive line there. I'm going to ask.
I saw it, and I love it.
So the third drive, I love doing these talks with you. It's great collaboration. So now my platform's slow, but I think that's where that third drive line comes in. Yeah.
Yes. But
if you show my screen addenda, you'll see here's the third drive line, just a shade above 114.
Yes, this line.
Yeah, and we're diverging pretty nicely. This last high that we posted was well under 70. So another great presentation, Alien. Do you have plans to get involved, to get into the business and teach people or run a signal service, or you like keeping things simple, and that means not getting involved with the public?
Yeah, I love sharing my ideas, but I thinking maybe, and when I finish my I have some goals. And when I finish my financial goals, I'm maybe switching to teaching people the way I analyze market and the way I set up trades and everything else. I don't love signals. I mean selling signals, but I just want to help people. So maybe giving ideas to everyone else is a good thing to do when you are just finishing your day. So
okay, well, you're already accomplishing that mission. You are helping people every time you're in LAR.
I hope so.
Every time you do an interview like this. So how long have we known each other now? Has it been a year yet?
Yes, almost a year.
Okay, so you already have a year under your belt of helping people that you may see in LAR and helping many others that you don't see in LAR that watch your stuff when I tweet it and record it, etc., etc. So thank you for all your contributions to our community.
You're welcome, Dale.
And great
thank
update.
you for this.